This is InsideInvestmentBanking.com, the place where you can find every secret you need to break into banking. Spreading comps. Unlike the previous task, this is a more specific type of financial statement analysis. This is the stereotypical, oh, can't we find an intern to do that? Kind of task. Because it's time-consuming, mindless grunt work. Or at least it is to any analyst with half a brain. But for you interns, it'll be a whole new experience and something you'll approach with trepidation. Unless, of course, you realize how simple they are. Spreading comps simply involves comparing a bunch of companies based on a handful of financial metrics, most notably value multiples. For example, EV, EBITDA. It gets trickier within certain industries where the financial metrics of concern grow and deviate away from simple value multiples. But don't worry, your group will handhold you through this. Before I continue, I like to head off any students thinking, can't the computer just do the calculations? Well, the answer is yes, there are databases filled with all the info, and calculations already done for us when we run a simple company search, for example, CapIQ. But the problem with these programs is they're terrible at rendering the kind of precise financial calculations senior bankers demand. And at $10 an hour, you are a cheap way to get accurate results. Also, every time I presented comps as an intern, I was asked how I arrived at every freaking metric, so by doing them myself, I was able to show the how, and didn't simply say, computer says yes, like a little Britain retard travel agent. Let's get back to Spreading Comps 101. At the heart of any spread is our client company or some other target company. We want to see how they're performing, valued, structured, etc. against similar companies. Similar can mean same industry, same size, same debt structure, etc., depending on the situation. IPO versus M&A, etc. It's important to realize that similar is a subjective decision and one that your mentor will often make for you by saying, spread these 5 companies. But if they leave it in your hands, then be careful to select companies that are similar along the lines that matter most to your end analysis. Although the end result, a couple of metrics for each company, seems simple enough, getting there can be difficult. Spreading comps, you see, is as easy as the company's financials and structures is simple. Meaning, if you get handed a couple of Enron-esque or transparent as the Fed types of companies, you could be in for a world of pain when it comes to finding the numbers you need to do things like add backs, multiples calculations, etc. For example, me in the first week of my internship all those years ago, hello, hidden non-recurring charges, off BS versus on BS dramas, complicated debt structures, dozens of dense language, confusing as hell footnotes, etc. Ouch. The intern who will impress bankers the most is not necessarily the intern who comes up with the metrics fastest, but rather the one who can show their full calculations for every metric and explain how they arrived at each answer when interrogated by a senior banker. For example, explaining how they deciphered what footnote 12 meant, showing how they added depreciation back in point B, etc. i.e., banking is just like math class. You'll get rewarded for showing working out. How should you go about prepping for spreading comps? The trick with learning how to spread comps is practice. So if you can get a hold of a few full examples, the financial statements, the calculations, the explanations, the end results, self-learn/reverse engineer them, and then spread the comps over and over again before your summer, you'll be fine. Once again, this is a banking task that is less difficult than it sounds, and within hours, you'll be spreading like you breathe, without much thought. Especially if you followed our advice about financial statement analysis, i.e., print off a few 10Ks and 10Qs now, get familiar with them, and you'll know how to find/interpret/adjust the data you need to create the comps fast. With all that said, when you're finally asked to spread comps during your internship, please approach the task with caution. Meaning, even if you have spread 100 comps going into your summer, go slow. Triple check numbers, reread the 10K and 10Q a bazillion times, and sense check the shit out of it all. The last point, sense check, is unbelievably important because if you turn up with a set of comps and I can see with a quick glance they're wrong, i.e. without even referencing the financial statements, because they're just illogical numbers, you'll look like a lumbering Arnold Schwarzenegger in Kindergarten Cop. Remember, as with all investment banking intern tasks, your aim is to not stuff up as opposed to wowing bankers with your speed. Accuracy trumps speed. P.S. Spreading comps sounds like a bitch, right? Well, yes, but the upside is that you'll be creating numbers that bankers will rely on to make important decisions, i.e., it's important work to an extent. Often senior bankers will use comps to sell clients on an idea. For example, hey, Company X, look, your leverage ratio is really low compared to Fannie Mae. We think you should do a $500 million debt issue and give us a hefty percent as lead managers. Excellent. PPS, when the client tries to mention Fannie went the way of the dodo and blew up, just financial model them to death. Oh yes, no client can stand up to an investment banking PowerPoint come Excel presentation that shows how a deal will magically net them an extra $100 million in EBIT. This has been another InsideInvestmentBanking.com presentation.